cryptocurrency, DeFi, NFTs? Sounds confusing? BitLab Academy is here to help. We make it simple. Start investing in crypto, learn trading fundamentals, learn to mint and trade NFTs. Join our community today. Crypto for beginners, taught by the pros.
Welcome to Rice TVX. On today's Rice Report, I am joined by 20-plus year veteran trader and the master of technical analysis, Gareth Soloway. He is the president and chief market strategist for In the Money Stocks and Verified Investing Crypto. He has been on the show before, and I will include a link down below and above for the playlist that I created with his previous appearances. Today, we're going to be getting market updates, talking about the US dollar, the traditional stock markets, cryptocurrencies, precious metals, and more. Before we get into it, visit ricetvx.com and sign up for my mailing list so you never miss an update or new Rice TVX content. You will also find my various social media links and more. You can also find Rice TVX on Odyssey and Library, where I have a full catalog of my videos, post up extra content, and share other appearances. And you can also find Rice TVX on BitChute. Get your free half ounce of silver. Take full advantage of my partnership with Money Metals Exchange in 5 easy steps. 1. Visit moneymetals.com. 2. Be a first-time buyer. 3. Purchase a minimum of $100. 4. Use the promo code RICE. 5. Get a free half ounce of silver, and it's an additional way to support the channel. I will include links in the video description for everything I just mentioned, as well as everything shared on today's video. All right, joining me on today's episode of the Rice Report is returning guest, the technical analyst master himself, Gareth Soloway. I will have a link down below for all of his previous appearances. I definitely encourage you to check those out, but they're not a precursor and needed for today's conversation. Gareth, welcome back to the show. How's it going, my friend?
Oh, it's going wonderfully well. Thank you for having me back. It's always a great discussion with you.
Well, again, man, I really appreciate you saying that, and I feel the same. So it's definitely a good time when we get together, man. Because I mean, I have a different way of looking at things with a good comprehension, where you have that same kind of outlook with this your technical analysis, which I have no inclination of, especially when in compared to you. So that's the reason why I really do enjoy our conversations. Now, I'm going to have links down below for your Twitter account if people want to follow you on Twitter at Gareth Soloway. I also have links for inthemoneystocks.com and verifiedinvestingcrypto.com. If you want to, man, because we usually wait till the end of the episode, do you want to go ahead and just quickly say what it is that you do with both In the Money Stocks and with verified crypto trading or verified investing crypto?
I appreciate that. So basically, I mean, just to summarize each service that I offer, one for crypto, one for stocks, is the goal is to help average investors just beat the best whales, the best funds in terms of return. And the way we do that is just by focusing on pure technicals. We get rid of the emotion. We just let the charts tell us what to do. And it really clarifies and allows us to maximize gain versus getting whipsawed by the emotion of a Twitter post or the media or anything like that. And I think that's the most beautiful thing about it is, believe it or not, people always think they can't compete with the institutions, but I've been able to, and I've helped people, basically blow those out of the water in terms of returns. So it's a great thing. I give out trade signals and I do daily videos with lots of in-depth kind of analysis.
And so just to clarify for people, In the Money Stocks is going to be your non-crypto related trading, and then verified investing crypto will be crypto related. And there's
perfect. Yeah.
If you watch any of the previous episodes that we've done, you'll know that everything that Gareth does is very transparent with his trades. So you can verify his trades, his success rates, his non-success rates. And there's a lot more successes than not. So you see a lot more green over here with the crypto charts. Terra Luna was the big one, but I think there really wasn't anybody that could have anticipated the Terra Luna stuff.
No, and I think the key too is that everything is done with a percentage of your portfolio. I always give my suggested amount that I'm doing it, and I think our Terra Luna was like 5% of our portfolio. So yeah, it sucked. It's never fun, but when you allocate the proper amount, it's like, oh, it's a setback, but it's not a destructive kind of force in your portfolio. And then you get back to making money with all the rest, and you just kind of surpass that. It becomes a distant memory versus a lot of investors who were just, involved so much in their, they invested so much, and it just becomes an absolute demolishing, issue when Terra Luna collapsed.
No, totally. And I mean, I don't really feel like a lot of the aftermath, not just from Terra Luna, but from everything that's been going on with Celsius, Voyager, Three Arrows, I don't think a lot of that is over yet. I'm sure you'll agree, but it's not really something that we can read in the charts necessarily. Obviously I want to talk to you about cryptocurrency. I want to talk about gold and silver, but the big thing on my mind right now that I've been thinking about is the US dollar. And so we have global central banks right now are ramping up with their fight against inflation, which includes US, Europe, Canada, parts of Asia. We just seen the June CPI numbers at 9.1%. The UK's numbers are 9.4%. We had the inverted yield curve, all the talk about that. We know that signals a recession 100% every time it's come about. Next week, we got the next Fed rate hike, and they're sticking to the 75 basis points. So I'm going to go ahead and pull up your screen. You got the US dollar chart there?
Yep, DXY right here. Yeah. So believe it or not, I'm kind of counter, and I've generally made a lot of money being counter trend to what most investors will think, or even the media kind of spews and I found that to be very successful. So when everyone's lobbying and saying, hey, listen, the dollar is going to continue to rip, you got a war with Russia invading, and that's making people go to the dollar. You got all this fear out there, global recession. I look at the chart and I just say, okay, well, let me look at the chart. That's the true form of honesty. And what you could see here is you have some big trend lines that we just slammed into. So I actually went bearish on the dollar. And in doing so, I've accumulated some crypto, still in some. I've taken some profits on the latest run. But basically, weakness in the dollar is good for gold. It's good for cryptocurrency. It's even good for tech stocks. And we've seen a real move up. So if you look at the dollar, this is the weekly chart. You can see we actually had a nice pullback right after hitting this area. And, you'll get some bounces in the dollar because it's a strong trend. But overall, I think the dollar has more downside to go, which means that Bitcoin and cryptos should actually catch a little bit more of a bid here, probably to, Bitcoin 25.5, maybe 28, 29, 30,000 over the next few weeks.
I muted myself.
No, it's all good, buddy.
Yeah, so that's kind of what you were saying the last time that we talked was the 25, 28K range. And going down to potentially like the 12-ish price, if I remember correctly.
Yeah. So I think that's important, is that, so basically if you look at this chart, right? So we slammed into this level here, which was the 2017 high, and we got below it. We saw the Voyager collapse, the Celsius collapse, Three Arrows Capital. I mean, all of that was bearish signaling, but the daily never had more than one close below the 2017 highs. It never had a secondary one below the lowest point here or anywhere. And that to me was telling me that smart money was buying in. And again, when you take that signal that you're still able to kind of, even though you get below the 2017 highs, but you fight back very quickly, that's number one, that's a bullish sign. But then if you look at the dollar and you say, okay, well, dollar's ridiculously extended. If the dollar starts coming in, that's good for commodities, which Bitcoin, you could arguably consider it a commodity now. That's good for crypto as a whole. It's good for gold. So to me, that was a good signal. And usually when the dollar pulls back, it's a risk on indicator. So when there's panic and there's fear, everyone still runs for the dollar. As much as you and I know that the government will continue to run up debt over the next 10, 20, 50 years, we're still kind of the strongest house on the street. And so when fear comes out, everyone wants to go into the dollar. So when the dollar falls, what it tells you is that people aren't as fearful, and by default, they're willing to take on more risk, thus buy cryptocurrencies.
Okay, and now that makes a lot of sense, and it's kind of interesting how all this is correlating because we've been seeing a strengthening dollar. Now, even though we're losing a little bit of strength, it's still, it's still hitting like some really crazy numbers. We have this is the big thing that I've been kind of going over in my head after listening to a couple different analysts and macroeconomic people would be, we have a situation where, from what I'm understanding, because of the dollar being so strong, it's actually affecting some of our ally nations. So it almost seems as if we should kind of pull back and weaken the dollar for our allies, which kind of coincides with going into the midterm elections.
Yeah.
Because I don't know, we'll see. I don't know after this next rate hike, we're going to see any more.
Yeah. So I'm kind of in that camp where I think that, the move on the dollar, and again, if I just zoom out here and let's just go from the beginning of 2022 right here, right? I mean, that is in currency markets. Now, if you're in crypto markets, this is like run of your mill type move up, right?
Right.
But in currency markets, this is ridiculous. This is like ground shaking, massive earthquake type stuff. And so it does have an impact on foreign, allies. In fact, interestingly enough, I think today the ECB raised interest rates by 50 basis points in a surprise move. And what they're doing is they're trying to counteract the strength of the dollar. They're saying, okay, well, if we raise our rates because the US is raising theirs, our currency will kind of start to match theirs. And that's exactly what we saw today. So you're right. It does have an impact. There's no doubt that it coincides, I'm sure, with the midterm elections. I mean, one of the big calls, I think last time I was on, I said oil was going to trade sharply lower, probably getting to 85 to 75 going into the midterms. And I think oil was probably in around 120 or 115 at the time. And we've seen oil collapse back below $100 a barrel now. So, it's kind of case in point doing exactly what makes sense when you know about midterm and just regular elections in general, as well as the worries about the recession and slowing down Europe and global demand. I mean, all these things coming to fruition, which, by the way, was counter to almost all the analysts out there that were predicting $150 to $200 in oil. I mean, to me, that was nutty because I could just see from my friends that, as oil and gasoline were going up, $5 a gallon plus, I mean, they were literally saying, all right, we're not taking that trip anymore. We're not going out to drive just to drive, only for like kind of, I got to go to the store to get food type situation. So you can see the demand destruction when oil gets that high. And that's why I don't see it going to $200 a barrel unless we got some sort of major global event.
Right. No, I would agree with that as well. When you mentioned the European Central Bank with the rate hike, another really interesting thing that I didn't mention was the dollar euro parity. So has the euro gone below the dollar at this point?
It did at one point, right? So if we look at the EUR US dollar, it briefly got below 1, and then you saw the bounce right here. So here's your parity where the dollar was exactly equal to the euro. It got just below there. And one of the things I teach in my services is that these even numbers have a psychological impact. So trading is technicals, which are charts, which really are a representation of human emotion and how the masses feel. So when the masses are bullish on something, you see it go up, buyers come in, and when they're bearish, it comes down. So it's all about how emotion is playing in. And so there's something about an even number where when you touch it, that's where the buyers will come in on the euro, and they did just that. Now, in a month, we may be much, much lower, but at least in the near term, that was a good opportunity to see that bounce in the euro.
So there's no longer parity.
Right. Now, the euro is back greater than the dollar, meaning €1 gets you $1.02, $1.02. So it's really semantics, right? A 2-penny difference. But I mean, yes, technically the euro has bounced back above $1.
And that's an entire continent, basically. That's all of Europe band together as one entity versus a nation that's made up of a bunch of states that are one entity. So it's
yes.
And it's really interesting to see this kind of battle going on. Where do you see things just for the remainder of the year? Where do you see things going?
Yeah, so I mean, I think the way
in terms of the dollar, I guess.
Oh, in terms of the dollar. So
and then everything against it, which would be everything that we normally cover.
Yeah, so I think my guess is you'll see some more downside over the next month or so in the dollar. The dollar is going to have a ton of support right in this range right here. You have a bunch of pivot tops. And I think that what we're going to see is later on this year is that we're going to find out very quickly that the Fed has raised interest rates too quickly. So they've tried to play catch up. They finally realized that the free money printing presses were a detriment to the system. It caused massive inflation. They weren't prepared for that. So what do? I mean, it's human nature 101. We like to think the Federal Reserve is immune from this, but they aren't. And essentially, they went into massive hiking. And what that did is it slammed the brakes on the economy here. And I think we're slipping into a recession. I think by year end, we'll probably be seeing that. My guess is, the dollar again, once the printing presses start up again, you'll see the dollar continue lower. And again, I don't know if the printing presses will start up this year, but I think 2023, you'll see easing at least in interest rates versus tightening or pause. And I think that, again, a lot of people will say, oh, the stock market should rally on that. I disagree. I think that with inflation remaining high, and my guess is it'll come into like 5-6%, you're going to see that we have a scenario where the Fed they can lighten interest rates or bring interest rates in, but they cannot stimulate like they have in the past to get us out of a recession. And my biggest fear is that we're going to be stuck in kind of this gray recession. It's it may not be ridiculously hard, but it's just going to be a long drawn out recession, because if you look at past recessions, right, the Fed has always come out gangbusters. And this situation, this time they can't do that. And that's my biggest fear, is that, we may just see a long period of time where the Fed just can't do anything, and the markets, the economy is kind of in the doldrums.
Yeah, I mean, that's interesting to think about. I just feel like it's just going to go one way or the other. Like we're going into like higher forms of inflation, which could take us into like a stagflation environment. We could be headed towards, I mean, we're saying recession, but a lot of what we've experienced has been mentioned is on par but greater than what we experienced with the Great Depression.
Yeah.
So, I feel like if we keep going in the direction of raising rate hikes, it's going to kill the stock market. And then if we reverse course and inflate everything, it's going to kill the stock market.
Yep.
Because it's just going to blow a balloon up to the point that it just pops. So It's like, to me, no matter what is done, and I mean, I'm not an expert in this, but I feel as if the Federal Reserve is, in all central banks, it's damned if I do and damned if I don't.
Yes. Although it's important to recognize that, I mean, they did this to themselves, right?
Agreed.
It's definitely not something that they just kind of got caught in magically. But I 100% agree that you're 100% right, is that there's no good outcome here, right? So if you continue to tighten and try to get inflation back to 2%, you're going to send the economy spiraling into not just a bad recession, but probably worse. And that if you say, okay, well, we're entering a bad recession, let me go printing to the printing presses again, well, then you're going to just see inflation soar not to 8 or 10 or 11%, but probably to 15 or 20%, which then is going to cause a massive collapse on its own. So like, I liken it to like, you have the patient on life support. And at this point, like, there's no real good scenario where the patient is going to survive. You have to have that patient just unfortunately pass on. And then at that point, maybe when we get a reset, maybe things can be done right. That's my hope. And again, I'm talking like years and years down the line, but my dream is that, unfortunately, it sucks to say it's a dream because it's not something I want, but the economy and the system needs a reset. And from that reset can hopefully come good things, like things done in the right way.
Like learning from our mistakes.
You'd hope so. You really would hope so. And
it would be great.
Pray.
But I mean, when what you're saying though, too, kind of goes back to looking at fiat currency cycles, and we're kind of already past the end of our cycle. So it makes sense. And when you hear all this talk about the Great Reset, New World Orders, and all these things, there's even talks of like jubilees taking place, which would be like debt forgiveness, where they just kind of get rid of debt, or in some manner. Now, I don't know if that's going to be for the everyday person or if that's just going to be for like corporations and such like that, but it's going to be interesting. Now, do you see the dollar getting any stronger than it is now for the remainder of the year?
I think short term it's topped out. So
Okay.
I think you actually have seen the highs in the dollar just because of the levels we've hit. And if you look again, if you go back to 2021, I mean, the move up has been from 89 to 109, basically. I mean, you're talking about over a 20% move in the US dollar. So my guess is the remainder of you'll have bounces, but I think we'll pull back. And I'll show you the level where I think we're going to here is you can see this area right here. It's this pivot top here from 2016. It matches perfectly with this one. And that's kind of where I think we'll see that pullback to, right? So I think that's where we're ultimately headed on the charts.
And that could be a little bit of a slow process, right?
Yes, it absolutely will be a slow process. Yeah.
Because I'm like, so because right now with the markets in general, we started seeing some action in the past week. I was kind of out of the loop because of my move. But it appears that, Bitcoin's now back over. I think last time I looked, it was like right around 23K. It was like right under, right above, right under, right above. And you were talking about 25, 28. Some people, I think you even mentioned earlier, possibly 30. Now, I still feel like there's a lot more downside. With the market kind of going up, there's kind of this euphoria that some people seem to think that we're back in a bear market or bull market. And I've experienced this enough to know that that's not the case. We have not seen minor capitulation, which is a big deal, and I'll include an article down below for the minor capitulation if people want to get a better understanding of that. But the basic gist is it's a profitability for miners. And when the Bitcoin price goes below a certain point, then they have to sell to be able to make sure that they're staying at least even when it comes to mining Bitcoin, or stop it in general. So we haven't seen a sell-off from miners yet, which is usually what in the past has signaled kind of a bottom for the crypto market, more particularly Bitcoin, but everything follows. So your thoughts on that?
Yeah, so I'm in agreement. So I think that you're seeing the dollar pulling back, which is kind of a rising tide lifts all boats mentality. So you're seeing money flow back into crypto. And what that's going to do is it's going to basically bring a lot of the bulls back out of kind of the forests, if you will, or the closets. And they're going to get real bullish again, saying, okay, the bottom is in. I had that short-term pivot right here at 25.5, but I think maybe we could even get up here. But ultimately, this would be kind of my max level, this 28, 29, 30,000 level. And then I still think we have that one more flush, like you're thinking, is where, you had with the 3 hours capital and Celsius and all these Voyager type scenarios, and even Terra Luna, you had a lot of kind of fear and panic. And that's usually the note of a short-term bottom. But I don't think it even reached close to the level of capitulation where you have people that are really like just, oh my goodness, this is the end of the world. Now, again, a lot of people feel like it is because they bought in at 60 or 65,000. But in reality, if you look back at 2017, that peak, when you bottomed out, like no one even spoke about Bitcoin. I mean, or I shouldn't say no one, but I mean, it was almost like that crypto, the crypto wasn't even in the vocabulary anymore. And I think we have to get back to that point. And I think it's important for investors to realize that this is the first bear market in crypto where the Fed hasn't been printing money, has been tightening, and inflation is high, which means it's hard for them to print more money again. And, keep in mind, past corrective moves on Bitcoin, 80 to 85%. We haven't even done that. And according to the metrics, it could be worse than that because of the fact that, again, you have inflation and you have a Fed that's tightening. So again, there's lots of false bottoms in bear markets where it kind of lures people in. My guess is this scenario. Now, for swing traders like myself, it's awesome. We get long, we make money, we exit, we look for the next flush. But again, I think it will, once you get up to these upper ranges, these two lines, you'll see lots of bulls coming out. And I think that is the signal that you're going to have that next move to the downside. One other thing I'll show you guys is if you take the top from 2021 from November and you stretch it to this top, look at this trend line as well. It's almost coming right down to this area, right? So that 28 to 30,000 level. And that, again, that's why if we get up there, I think that's my max upside level on Bitcoin.
Now, do you have and I know you can't completely give me like dates and stuff, but do you have a time frame for this? Like when you see Bitcoin kind of getting to closer to the 28K range, and then when we're going to start seeing that real sell-off and capitulation. I know you can't fully predict, but you're one of these guys that you show me the chart, I can tell you the news.
Yeah.
So I'm trying to kind of get a little forward thinking on it, like as far as like, because I know you're brainstorming things. How much of a time frame longer do you see Bitcoin going up before we see it pull back down?
Yeah, I would guess 2 to 4 weeks kind of would be in that range where we could chop sideways for 2 to 4 weeks and then kind of grind up. I think we probably hit 25.5 or 25,000 within the next week. And then you'll see some resistance there and some chop, and then one more leg up going into that. And then after, probably outside of a month, we start our next leg to the downside. And again, really, if you look at the chart, I mean, what type of pattern is this? Well, it's a bearish pattern, right? Just like right here, right? Down move, sideways consolidation, down move, sideways consolidation. So it's just replicating what has happened in the past. Even over here, I mean, big down move, sideways consolidation led to further downside. Now, there is something that I'm watching, right? So this downsloping trend line, if price were to establish itself above that for, let's say, a week or two and really hold above it, then I would start to say, okay, maybe the low is in. But until that happens, the trend, I mean, it's called a trend line for a reason, right? You're connecting the high pivots. As long as that's in place and it hasn't really been held above by price, you have to think there's more downside.
And as long as price is up, we're not going to see that real capitulation from the miners either. So it's kind of a catch-22.
I agree.
You're not going to see a capitulation until you start seeing the prices going down now. But if someone was smart, listen to what was just being said, these are really good opportunities to either dollar cost average buy in or sell your way out. And then, you could always buy back in when prices go lower. If we're looking at going below 15K and you have an opportunity to exit at 25 and re-enter at 15 potentially, or somewhere roundabouts, that's how you make effective trades. And something that I noticed on your Twitter account, you posted yesterday, and it was like almost 24 hours from the time that we're doing this, is you said, amazing day, both day trading and swing trading. It's the best year I've ever had swing trading.
Yeah.
That's awesome, man. Congratulations.
Yeah, thank you so much. And I mean, just to be clear, swing traders thrive on volatility, right? So if you're a long-term hodler, you're just loving that market slowly going up day after day. For me, which is a much shorter time frame, I love the big ups, the big downs, the big ups, the big downs. And as long as I can read the pivot points, the levels, the supports, the resistance, it's amazing for swing trading. So yeah, it's been quite the year, both in stocks as well as in cryptocurrency.
The next question I got for you besides Bitcoin would be about Ethereum, because Ethereum seems to have been leading this charge. It was definitely having more percentage gains than Bitcoin was. And a lot of it I feel has to do, and a lot of people are talking about the ETH 2.0. And I'm guessing now it looks like they're pushing it off until December 1st this is something different. This is a completely different article. I was looking to see when they were targeting. I think it was September or October that they were targeting for the ETH 2.0 to go through. But what are your thoughts on Ethereum and how it's led the charge so far?
Yeah, I think for the most part, Ethereum percentage-wise was down so much more than Bitcoin, right? So if you look at almost 5,000 to a low of almost 800 percentage-wise, that was a massive, massive sell-off, as opposed to Bitcoin, which was a big sell-off as well, just not as much. So it makes sense that, that one beaten down so much is going to get the bigger bounce. It also tends to lead. Sometimes we've seen altcoins lead. It's a perfect example of risk on, right? I mean, the altcoins are definitely the risk on assets. Bitcoin is more the old trusty commodity. I think the dollar strength has probably kept the Bitcoin chart down a little bit because, again, if you think about what Bitcoins are traded in US dollars or stable coins that track the US dollar. So I think that's been one of the reasons why Ethereum, which is more like Ethereum, to be honest, is more like a stock, in that it has a use case, right? It makes something, or at least it helps people do something, versus Bitcoin is just basically a commodity. In fact, Gary Gensler, I think this morning on CNBC, was basically saying that. He said, most coins out there are more like stocks versus Bitcoin more like a commodity. So I think the Ethereum is leading it like a stock bounce, while Bitcoin is kind of languishing because the dollar has been so strong.
And I think Gensler is also setting up the market too, because he's pretty much calling everything a security. And I don't agree. I do not agree. I know what securities are, and I think we need to update some of the definitions of how we determine what is a security. The Howey test is completely outdated. It's something from 1930s or 40s.
Yeah.
So yeah, I mean, and technology has changed so much, and crypto is almost its own asset class to begin with. You can look at it as a commodity, but with it not having its own asset class, everybody wants to define it as what it is, and different government agencies in the United States define it differently, which is even more confusing.
Yeah, I agree 100%.
Do you see more upside with Ethereum as you see with Bitcoin?
I do. So you've had these pause days here. Even today, Ethereum starting to creep up. The first big challenge for Ethereum's at 1700, this pivot low, this area right here, and all this sideways chop. And then if it gets through 1700, I think you make a run at 19 to 2000. So again, I would say if Bitcoin's going to go to 28 to 30, I think you probably get to 2000 on Ethereum. And then again, if you only get to 25.5, then maybe Ethereum stops around 1700. But in either case, I still have more upside here to go, as you'll see again, kind of almost like a nice little cup pattern here.
Yeah.
It's not quite a handle yet, but for the most part, it's a nice little cup potentially. And yeah, technically it continues to look strong until it gets into some of these resistance levels.
Okay. Sounds good, man. And I'm sure, we talk pretty much monthly. So hopefully by the next time you come on, we'll be kind of in the euphoria of this and everybody getting all excited and me having a good opportunity to exit.
Exactly.
Because that's really what I'm looking for, is the right moment to exit some of my holdings, because I wasn't smart in the past and I need to be a little bit better about that.
Yeah.
Which, kind of stinks. So, two of my other favorite things are gold and silver. Mm-hmm. It looks like, anytime we're seeing a strengthening dollar, we're going to see gold and silver get hit, kind of like what's happening with Bitcoin. I haven't paid a lot of attention to the charts, but I know that silver has been hit recently. Mm-hmm. So what are your thoughts on gold and silver? Because I know we've talked several times this year, and you've pointed towards this in 2023 being a really good year for precious metals.
Yeah. So I've been, the strength in the dollar surprised me a little bit. Now, granted, gold is still surpassing gold is only down slightly for the year versus, Bitcoin as well as the stock market. But the one thing on gold is overnight, it hit this major support line. Look at that support line here. And look at the bounce that you're getting in gold. It's really a tremendous bounce, basically $40 from the overnight low, which is a big move for gold. And so short term, that's a support level that I think you look for a further move up on. Minimally, I think you go back to about 1785 to 1800 on the gold chart. And then basically what I'm going to start watching is this trend line here, right? So this is probably, if you look at this pivot low here, and we draw a trend line, notice how that's right almost at the same spot. So if gold rallies, that's going to be your resistance line right around, 1785 or so. If by chance it can get through, that's where you start to have that bigger move up on gold. But right now, at least gold hit this major support line, and it held, and it got an amazing reversal. I mean, just tremendous kind of short squeeze almost off of those lows. Now, if we look at silver's kind of, silver bouncing a little bit here as well. It broke below this kind of channel a little bit here. So it's just below though. And you have so much support right here. So I'm actually bullish on gold and silver right down here. Both are into major, major, major support. I mean, look at this chop going back to 2019. All this sideways, this was your COVID drop. But if you took that out and you just assumed sideways, then it was just before the big breakout. And now you've done a full retrace to the pre-COVID highs. And I think that's, again, a major opportunity for silver as well as gold.
In theory, as long as we're seeing the dollar being weakened, then we should start seeing a rise in the price of gold and silver, as we're seeing a price in the commodities and in Bitcoin and cryptocurrencies, correct?
Yes, correct. And I think there's even some opportunities in some of the miners. I know you don't do miners much, but like I was picking up a little bit of AEM today. You can see this is a Nico Mines, and the stock has fallen from $66 down to about 40 on this decline in gold and metals, and just, it's begging to get a technical bounce here back to about 45, 46 or so. So kind of some interesting charts out there. There's not a lot that's, at a near-term low, but the mining stocks and gold and silver are really, at their recent lows here.
Okay. That makes a lot of sense. It's just such a really interesting time period when it comes to economics with all the stuff that's going on, because it feels like at any moment one big domino is just going to take everything out, and and everything that we're talking about is not even going to come into play, because I just feel like we're at this point where everything can just end.
Yeah, I agree. I mean, this is something that, really since the 70s and 80s, we haven't experienced. And I wasn't, I was born in 1980, but obviously I don't remember any of this. But I mean, it's also a different time in that I feel like you have a lot more, a lot of other factors that are troublesome as well. You have global instability. I mean, I guess you could say back then you had some of that too, but to me, it's a period in the market that most people have not dealt with the inflation side, and with the Federal Reserve being able to, or being unable to print our way out of recession.
So do you think that, because one of the things that I've been hearing other analysts say is that we're not going to see a bull market until we see Federal Reserve and other central banks reverse course, which would have to mean printing again, turning back on to printers. But you're saying that they don't even really have that. That's going to make everything worse. So do you see the Federal Reserve reversing course in that aspect?
So what I would say is that I do see the Fed reversing at some point. So think of it like a scale, right? And I always like to use this analogy here, or this example, where right now we have low unemployment and high inflation, right? So here's your inflation up here, here's your unemployment down here. Now, as the Fed tightens, inflation is going to come down, but unemployment, because the economy is forcing the economy to slow, unemployment's going to go up. When you get to a certain level of unemployment, let's say 10%, they're going to feel the political pressure and just the pressure in general to print again, which will then shift them back. So you're going to be on this scale back and forth. The problem is it's back and forth down here, and then it's just going to both rise up and up and up, because inflation's never going back. No, I shouldn't say never, but I don't see it going back to 2% or sub 2%. No. So when they start the printing presses again, it's going to have to be a really bad scenario, because inflation will still be at 5% or 6%. And then you're going to increase inflation to 15% or 20%. And you're really in this tough scenario. So you'll have mini bull markets where the market is going to be like, yes, the Fed's not going to tighten anymore, buy all risk assets. And then all of a sudden they're going to say, whoa, the inflation numbers are going to get really bad again. And then the Fed will tighten, and then unemployment will skyrocket again under the next recession. And there's really no outcome. So I have no problem going on record that I think the highs in the Nasdaq and the S&P 500 are probably like a decade high. Like, I don't think I could see us being in this troublesome period for like 10 plus years where we don't see new all-time highs on the stock market.
Can we pull up like S&P or Nasdaq and look at that?
Yeah, so this is the Nasdaq chart here, folks. So let me jump out to a wider time frame.
I still need to get my reading glasses because I can't see the little small writing from my screen.
No worries. It is hard. It is hard. But let me get rid of this for now. I mean, this is a channel that I have, but basically, I mean, you could just see how ridiculous it is. So basically this is the market. This was the .com bubble right here, right? All right. So we all thought the .com bubble was the most, at least most people back then were like, this is the most ridiculous bubble in the world. And then look at the market after. I mean, this is more of a normal market. And then here's 2009. And then once the Fed turned on the printing presses, look at the market. I mean, this is ridiculous.
That's your QE 1, 2, 3, and then infinity.
I mean, infinity, right? And so really what you're doing is you're starting to pull back off of this infinity insanity. But if you go back to the markets over the pre-printing press, aside from this period here, which wasn't even that crazy looking back compared to this one, I mean, a normal market does not behave like it has over the past 10 to 12 years. It just doesn't. And so if the Fed is really going to be handcuffed, the markets are going to be in a kind of a quagmire where they're going to be much more prone to sideways or lower movement for probably years and years to come.
Yeah. No, people aren't going to be taking like risks and stuff like that. It's going to be very safe plays. Do you see like what could you see crashing the Nasdaq chart?
I could see, honestly, if you get a worst case scenario, I could see the Nasdaq revisiting the .com high here, which is also this pivot area. So that would kind of be a worst case, but you're talking like 48 to 5,000 on the Nasdaq. And I mean, that would be from almost 17,000 down. That would be an incredible drop.
Well, it looks like we could pull back a whole lot still without like a crash necessarily, because I mean, people have been in profits for so long that,
Yeah.
a
Well, that's
smart
the tricky.
investor.
So this is the tricky thing is that if you ask the average investor didn't really come into the stock market until like 2020, right? When the COVID lockdowns occurred and the government was sending checks, a lot of people discovered, a lot of Americans at least discovered investing again. They finally were like, okay, let me get back into the market. And the markets were awesome for like a year and a half until the top was put in. So the problem is that yes, like 401k money that's been consistently invested, pension funds, they're deep in the money. But a lot of individual investors, just like with crypto, they only got in the last year and a half, and they're already deeply underwater. And unfortunately, it's probably going to get worse. But we see this. This is what's so nuts is that we see this every bubble in 2000 in the 2000 .coms. The small investor got lured in like the year 2000, right at the end of the .com bubble. And then they got so burned that they said, hey, I'm not going to invest again. Well, guess what? The markets lured them back in 07 when it just seemed like anyone could make money. And then the next collapse happened, right? And then they were like, okay, I'm not going back in. Well, guess what? They finally came back in 2020 just before this top. So I mean, this is a rinse and repeat type scenario where the smaller investors, the John Q publics, get lured in at the end of moves because finally there's so much hype and money becomes so easy to make that they get in, but they're buying right at the highs.
And what they're doing is they're technically providing liquidity to all the people trying to offload.
Oh yeah.
And psychologically you get the everyday individual to get on, so you have that liquidity, and then the average Joe gets screwed.
Yeah. And listen, I mean, I don't think it's a huge conspiracy. I think it's just part of the nature of the markets, but it is the nature, it's the psychology of the market. So you could go back to like ancient Egypt. There were things being traded back then. The tulip craze, I'm sure you know about that and the craziness that was going on with the tulip craze, but everything always, the human mental side just tends to repeat greed and fear. And we get lured in at the end of things because they get so exciting that we just can't sit on the sidelines anymore. It's just so happens that once every individual investor gets in the market, who's left to buy? I mean, just ask yourself this. I always like to use this example is that, okay, in the beginning of a bull market, maybe 3 investors are invested out of 10. Let's just use a small market, like 10 people. And then as the market goes up, they lure in that 4th, that 5th, that 6th. And right at the end, they lure in 7, 8, 9, and 10. And then the problem is that when everyone owns a market, who's going to buy from them? Right. So then all that has to happen is one person sells and the market drops, and then someone else gets nervous and sells. And before you know it, they're all selling, and it's this snowball down the mountain.
Yeah. No, you said it very well. That's exactly what it is. Were there any other charts that you wanted to go over, or anything that you thought was important? S&P, is it comparative to Nasdaq?
Yeah, let's take a look at the S&P here real quick, because I do think that is worth keeping an eye on. So I think the S&P, for the most part, here's your long-term trend line from QE. So again, this is going back. Basically, I can even extend this back to 2009, the lows. That's it. So this year, I think we go back to this level, which is the pre-COVID highs, around 3,400 on the S&P. I think over the next year or so after that, we'll test this longer-term trend line. And then if we break that, that's where things can get very, very nasty. But I would say this one's a no-brainer that we should tag this year. And then this one probably in 2023 gets tagged around 20, probably is around 3,000 by that point. But again, if you just look at the facts, which are, number one, charts are still long-term extended. The printing presses have stopped now. All these metrics tell us that the markets likely will come in. And if you have that mentality that markets, and by the way, this is the wealth effect that drove us up. It's in reverse now. So as people look at their 401ks and they're like, oh, I'm down 20% or 25%, mentally they're like, okay, I don't feel like I can buy that new car. I can't buy that new game, that new video game. And it all of a sudden it's a self-fulfilling prophecy where it creates a recession. So I think then you have earnings dropping and all of a sudden valuations have to come in on stocks.
Now, for the stock market, for Nasdaq and S&P, for it to go down below the numbers that you're talking, or even hit the pre-COVID levels, that would have to indicate a stronger dollar, or at least the dollar staying in the area that it's at.
Yeah, I would think, you would think that the dollar would have to get stronger there. I'm not convinced of that. I think a lot has to do with, does the Fed, as the economy sputters, does the Fed then step off hiking, in which case the dollar in theory would get weaker. But again, there's a lot of unknowns here at this point, and I'm kind of a spectator as well, kind of keeping an eye on the charts. A shorter term, the dollar should continue to pull back, but we'll see what happens when we do get down to those levels with the dollar.
Okay, cool. Well, I mean, you've covered a lot of what I kind of wanted to get from you, which I do appreciate. Again, was there any other charts or anything that we didn't go over that you think was imperative that people need to be aware of? Or
no, I think for the most part that covers it. I think investors should just remain diligent in their kind of skepticism of the markets. I think you have to think to yourself that, don't get caught up in the hype. You see Bitcoin rallying up. Doesn't mean don't have a small hodl position. I even have a small hodl position from 19,000, 1/6 of what I eventually want to own. But also be skeptical in that this is a bear market. Markets likely will have another leg down. Bear markets notoriously have these rallies where it makes you think the new bull has started because everyone wants to believe that, but it usually isn't until you get that full out panic, capitulation, collapse. And we certainly haven't seen that in the stock market. I mean, crypto, I can understand some people arguing about the 20,000, 17,000 area, but for the stock market, you certainly haven't. And if the stock market has another big leg down, I'd be hard pressed to understand how crypto would hold up in that scenario as well.
I mean, no, that's an understatement, because I mean, for now, until something else changes, the crypto market is very much correlated to the stock markets, and we really can't deny that. If you're denying that, you've got some cognitive dissonance going on. You might need to get some help. So again, man, I'm doing a screen share, and I've got your Twitter account pulled up. People can follow you there over on Twitter at Gareth Soloway. I'm going to have links for inthemoneystocks.com, for verifiedinvestingcrypto.com, and a playlist with the previous appearances that Gareth has been on the show with. You got any final thoughts or anything you want to add before we do wrap up today, my friend?
Just the only thing I would say is that the one way to get away from being an emotional investor doing the wrong thing at the wrong time is education. And again, learning a little bit every day. It doesn't have to be a ton. Learn one new thing a day about the markets, how they operate, work on your own discipline, your own emotion. Those are the ways that you will be able to profit in any market and avoid kind of getting sucked into the craziness. So education is number one. And again, I stress it. It's so important.
No, it is. It's probably one of the most important things, and it's investing in yourself, which is one of the best things that you can do. So thank you again for your time. I appreciate it. And bear with me real quick. I'm just going to do the wrap up. So again, ladies and gentlemen, I'm going to have links down below for everything we talked about on today's show, except for the charts that Gareth shared, because that was on his end. But I do appreciate you tuning in. Make sure you're checking out those previous episodes. Gareth does come on the channel at least once a month, roughly. So make sure you tune in for the next appearance. I do appreciate you watching. If you're not subscribed, make sure you are subscribed. And I will leave you with this. Be blessed, be the change, practice change. And I'll see you on the next show.